Good morning, everybody. My name is John Williamson, and I am one of the group specialists here at IHC. And today we are going to be discussing our small group level funded medical product called Simplified Funding Concepts, or SFC for short. So on the call with me today, we have Kim Carboni out of our Boise, Idaho location. She's our other group product specialist. And we are looking forward to reviewing our level funded product with you. And if this is your first time working with us, we do have you covered both east of the Mississippi with myself out of Columbus, Ohio, and west of the Mississippi with Kim. So again, thank you for attending this morning. I know everyone is getting busy. A lot of areas are starting to get back to work in a more normal setting. So we appreciate you taking the time today. And we're really excited to show you our level funded product and how it can be an outstanding lower cost alternative to fully insured medical plans on the market today. And before we get too far into it, Kim, I believe you want to touch on questions and some other housekeeping items, correct?
Yes, thank you, John. We're going to try to keep this webinar to 30-35 minutes so we all can get back to prospecting for new clients. But before we start, want to make sure you're aware we can answer questions in the question box. If you've got questions, please note it there and we'll answer them at the end of the webinar. If you're interested in getting a copy of the PowerPoint, please indicate that as well. And if you'd like to be included in any of our future webinars, please add that into the comments and we'll get information out to you. So with that, John, let's get this started.
All right, sounds good. So before we get too far into the level funded medical plan, I want to give you a little background info on IHC and how IHC can help you as a company. So within IHC, we have 3 wholly owned insurance carriers: Madison National Life, Standard Security, and Independence American. And we have a wide variety of sales distributions, working with independent agents, general agents, even wholly owned call centers, and INSX Cloud, which is an online retail platform for agents and insureds. And, you know, I would definitely recommend, if you haven't been to an INSX Cloud webinar, take a look. We should have one coming up here in the next week or two, so keep an eye out in your email for those invitations. And this can certainly help a lot of employers right now that might be faced with the option of, you know, terminating their group coverage and sending everybody to the individual exchange. INSX Cloud is a great option to solve some of those issues. So,
John, we should be doing another INX.
Go ahead.
We're going to be doing another INSX Cloud webinar next week. So if anybody is interested in receiving that invite, please put that into the questions and we'll make sure you get an invite to that next webinar.
Perfect. Thanks, Kim. And sorry, I'm a little excited here today. So a lot of good stuff to go through. And in addition to the carriers and the sales distributions, we also have a couple other domains that you might see out there in the wild, namely Healthy Deals and PetPlace.com, where consumers are able to shop direct with the carrier as well. Now, a lot of people who might not have been exposed to a level funded product before might be wondering, why should we be looking at a product like this, and why should we be offering this to some of our employer groups? And the main reason is, again, this is a fantastic alternative to the fully insured major medical plans available on the ACA market today. And with our particular product, it is available for groups of 5 to 75 employees enrolled. This is an underwritten product, and by being able to individually underwrite the employees as a whole, we're able to see potential savings of upwards of 20% over comparable fully insured plans in many areas. Now, being an underwritten plan, this means this is not necessarily a fit for every group out there on the market, but for those that are able to get through medical underwriting, who want to invest the time in medical underwriting, this is an outstanding opportunity for those employers to explore. The product is structured in a way that the employer is still offering a consistent level of benefits in terms of covered services, while gaining the potential to get money back at the end of the runout period. It's extremely important to keep in mind that outside of fixed monthly premiums, there's no additional risk to the employer. You know, a lot of people, when, you know, the first time they're looking at, I'll say, the new generation of level funded plans, they're remembering some experiences, several years back, maybe 10 years back, where in the small group market, we had some cash flow issues. Maybe some carriers were coming back mid-year looking, hey, you're short on the claims fund. We need a little additional money in there. With our plans, we are not going to come back mid-year and ask for additional funds from the employer. The stop loss and claims funding mechanisms on the backside of the plan ensure full coverage for your employer groups.
John, you want to hit a little bit on the refund?
Yeah, absolutely. So we do return 100% of any remaining claims funding after the runout period. We do have a 12-month runout period, and by realizing the potential refunds that employers can receive, we can get employers out of the mindset of, their healthcare plan being strictly a year-to-year benefit, and think of the level funded benefits as more of a 3 to 5 year program, especially when we look to bundle this with some of our other products like our group gap plan, maybe an accident CI plan, where we're taking the refund and we're applying that to multiple product lines year after year after year. And lastly, on top of that, we also offer some further cost savings options by providing multiple network options, including a full reference-based pricing option. Now, everything we've discussed so far sounds great in terms of why you should consider a level funded plan, including the fixed employee premiums. But some of you might be wondering exactly, how does it work? How is this administered? What does it look like on the back end with the stop loss contract? And for each month, the employer is going to be billed their full monthly premium. Now, we call it fixed premiums because your composite rates are fixed for that full 12-month policy. Now, if there are any additions or terms mid-year, we adjust the premium by solely that composite rate. So for example, if we add an employee-only member, we're going to add an employee-only premium. If we remove a family, we're going to remove the family premium. So we're not re-underwriting the group medically mid-year if someone comes onto the plan or if someone leaves mid-year. Now, once we get the full premium in-house, we divide that total premium into 3 parts. You've got your claims funding, your stop loss premiums, and your administrative costs. Now, some of you might be wondering, okay, what happens if we have claims in excess of either the specific deductible or the total aggregate claims funding on the group? So the stop loss carrier is going to make accommodations to the employer's claim funding to make sure their account is whole. We'll essentially advance money into that employer's claims fund so they're not running a deficit. Now, keep in mind, there's no additional risk to the employer beyond that monthly premium. Now, we do process claims incurred in the 12-month policy period, and we provide a 12-month runout period to help cover claims incurred, but potentially not submitted yet. Let's say we're getting towards the end of that 12-month policy period. Someone has some claims. They might not have been sent in by their provider by the time that 12-month period is over. So that's why we do have that runout built in. And keep in mind, we return 100% of the unused claims funding back to the group.
Now, John, is that refund only to groups that renew with us?
No. So we'll actually return 100% of that remaining claims funding, whether or not you renew. And we don't charge you to keep your money. So think of it in the sense of a lot of carriers out there, they might be doing an admin credit. They might be returning 50%. We do return 100%. We keep nothing of that employer's claims funding.
John, I can share with the group, I just was on a call yesterday with an agent that their runout has run out for the 12 months, and we're giving this group 23 life group $23,000 back. So good savings for this employer.
Exactly. And, seeing real dollars like that, especially in a time like this where the economy might be in a little bit of a downturn, that's real money that can help these employers by putting that back in, maybe advancing payments on their premium or looking at some other ancillary lines, maybe a gap plan, maybe some life insurance, some other benefits that they might not have when we put this level funded plan in force. So again, this is an ACA compliant product available for groups for 5 to 75 enrolled. Recently, we expanded our eligibility from the 10 to 50 market, and we are excited about the new opportunities that we can pursue, especially in that 5 to 9 market. Again, the product is medically underwritten, and our applications are available on FormFire and Easy Apps Online for those that do use those online application portals. And those plans are underwritten by Westport Insurance Company. They are wholly owned by Swiss Re, and Swiss Re is a really well-known name in traditional and large group stop-loss circles. So with our plan, we've got a wide variety of deductibles, co-insurance options, and even different levels of office visit copays, which allows us to have some greater flexibility in terms of our plan pricing. And on top of that, we do have access to multiple networks, including Aetna Signature Administrators, PHCS, and the previously mentioned reference-based pricing plan. Probably the most important thing to cover here is that we provide each employer with protection in the event that we do exceed the aggregate claims funding set up by the plan. Again, the stop-loss carrier is going to advance money into that claims funding, and that will be reconciled at the end of the runout period. So keep in mind, that employer is going to have fixed monthly premiums for that 12-month policy term. Now, one of the unique features about our SFC plan is we do have multiple drug card options. All of them are managed by CVS Caremark or PBM. And one of the great options that we've had here recently is what we call our value formulary option. This particular drug card option provides coverage for generic drugs, brand name formulary, and specialty drugs. Brand name non-formulary drugs are not covered, but keep in mind every therapeutic class of meds approved by the FDA does have a covered medicine, either on the generic, brand name formulary, or specialty tier. So even if someone might be considering a drug that wouldn't be covered under the value formulary plan, they are going to have some covered options through those other 3 tiers. Now, this option is available for both standardized copay plans as well as HSA plans where prescriptions apply to your deductible and co-insurance.
John, I want to just touch real quickly on the pricing difference from our 4-tier drug card to this value formulary, and that's about a 6% savings. And why is that important? Well, being a self-funded plan, these non-formulary drugs right now are what we're seeing on TV. The employee may spend a $100 copay, but the cost of the drug is $1,000. Who's paying that other $900? Right, it's coming out of the employer claim fund. So not only are we saving the employer on the front end month-to-month premium savings by 6%, but we're also saving that excess dollar amount for that prescription out of their claim fund. So really, this is a great value formulary drug card for self-funded plans.
Exactly, and you know, with us being a 100% refund of anything left in the claims funding, looking at it that way, you might be seeing savings of, you know, going from the non-formulary brand name to a brand name formulary drug. That might save us $500 a month in terms of that claims funding. If you do the math on that over 12 months, you're looking at about $6,000 that now that employer has in that claims funding that would have been gone otherwise. So this value formulary prescription option does save the employer money right up front in terms of saved monthly premium, but also on the back end by offering a bigger potential refund at the end of that 12-month run-out period. Now, with regard to plan options like deductibles, co-insurance, things like that, members are going to see that this is very, very similar to their fully insured coverage they might be accustomed to. You know, they're going to have office visits, they're going to have prescription benefits, they're going to have deductible and co-insurance options. And deductibles do range from $1,300 all the way up to $7,900. And one of the biggest things that I'd like to point out about our plans is that if a group elects an office visit copay, we do cover through the plan the first $500 of diagnostic lab and x-ray benefits per day at no cost to the member. So this is a huge cost savings benefit to the actual employees and their families that you might not see on some of our competitors' plans. And lastly, I do want to make everyone aware that emergency room services apply to deductible and co-insurance with no copay or access fee. So even some other carriers out there that apply ER services to deductible and coinsurance, you've still got an access fee on top of that. With us, it's straight deductible and coinsurance, and we do have a really attractive urgent care copay of $50 on each of our physician office visit tiers. So we want to encourage people to utilize that urgent care for a $50 copay instead of going to the ER and having that full cost apply to your deductible and coinsurance.
John, I wanted to share with the group, I was talking to an agent up in Wyoming earlier this week, and she was explaining to me that, you know, a few months ago, the economy was good. Employers could take a 10, 20, even 30% increase to stay with these big marquee carriers. She's getting a lot of her groups calling her already saying, how can I cut costs? How can I cut costs? My business has taken a hit during this COVID, and I need to figure out a way to save the cost but retain employees. So our options here with moving to those value formulary drug cards, alternative pricing like reference-based, are some of the ways that we can assist you when those clients are calling you. Remember though, this product on the self-funded side is a year-long commitment. So if an employer is not willing to invest a whole year, this product's not for them.
Now, in terms of product availability, Simplified Funding Concepts is available in 25 total states, and we are currently evaluating additional states to add down the road.
I can tell you, John, Oklahoma and Nebraska are our two recent adds, so we're looking forward to helping those agents in those states with their level funded options.
Perfect, and that just came online. I think we started quoting that last week. So if you are working in those two states, we are very eager to see how we look in your market. So absolutely send us those opportunities as soon as you can. And as we touched on earlier, we do have multiple network options like Aetna Signature Administrators and PHCS. So in terms of provider access, we do have networks that should work relatively well in every market that we're selling in. Now, if we do find that PHCS doesn't have a specific hospital group or a specific provider, we do have the ability to pivot to quoting Aetna and vice versa. Now, even in some of the more rural areas that traditionally struggle with provider access, maybe Wyoming, Montana, North Dakota, maybe some areas of Iowa, you know, having access to a reference-based pricing plan, that gives us an opportunity to provide really solid coverage on the medical side without being tied to a specific provider network where you might have to drive 30, 35 miles to find a provider and network. So we do have you covered through every option out there, whether it's a true PPO plan or whether it's full reference-based pricing. Now, we're going to get into producer resources and administration. And one of the things that I want to encourage you is use Kim and I as your first line producer resource. We're here to help you with sales service questions, billing issues, even claims issues. We encourage you to come to us and get us involved as soon as possible. One of the great things that we pride ourselves on is our service. And a lot of agents will actually tell us, you know, I really like working with you guys because you don't give me a 1-800 number. You personally look into these issues and you get them handled for us. So again, I encourage you, come to Kim and I if you do have questions, whether it's sales related or service related. Now, in terms of our plan administration, we are using Allied Benefit Systems out of Chicago, and they're a fantastic TPA, and they're administering our claims, billing, and eligibility for us. Now, once we sell an SFC case with you, the agent's going to receive access to the Allied web portal, where the agent has the ability to pull things like monthly billing statements, monthly claims tracking reports, some other documents, and you can even look up individual members to confirm eligibility and access a PDF via an ID card. Each employer also receives access for their group with the same level of information. You know, they've got a ton of experience administering both large and small group level funded plans, and some of you might have worked with them through some other carriers that are our direct competitors as well. So They're very well versed in this small group market specifically. Now, with that said, if you're looking at just a high level of information for very basic questions, we do have a great website available that contains information on SFC, as well as some of our other group products. I'll give you a moment to jot down that web address if you're interested. And this is our Group Resource Center. And through the Group Resource Center, you're going to be able to download a plan brochure, a state availability map, if you are marketing in multiple states. And that's not just for SFC, but that's for each of our group products as well. Now, again, this is just very high-level basic information. So if you have some further questions or maybe some questions that require a little bit more detail, absolutely, Kim and I, again, want to encourage you, come to us as your primary group resource. Now, in that Group Resource Center, there's also an option for you to click a Get a Quote tab, and you're going to be able to put together an email with quote information or additional questions, and that'll come direct into IHC, and Kim and I will be able to pick up that email and get that over to you in the event you do not have our contact information. Now, in addition to the SFC product, we do have some other products with IHC, both group and individual, that are available through us directly or some of our other distribution partners.
I tell agents all the time that I work with, IHC has something for everyone. May not be in what you came looking for, but we have solutions for your groups. With this, trying to be an IHC, offer both your group and individual products. Don't forget, we've got multiple individual products like our short term, which can be bundled with our health discount, which includes a telemed. We can bundle it with some hospital indemnity plans. So we really do have a benefit for anybody looking for something.
And one thing that I do want to mention is, even if we are installing an IHC level funded plan, our SFC plan, some of these other products, we are able to get you set up to go in and offer these things to employees of a group. Things like the telemedicine, if that's something they're interested in, maybe an individual dental product, maybe even an accident or CI plan. These are things that you as the agent are able to sell to these employees as part of their overall benefit package. So in addition to our SFC product, we've got a lot of things that can help you out. And with that, thank you so much for attending today. Hopefully that was insightful on IHC's level funded product, giving you some basic knowledge and some tools to go out and be prepared in the marketplace. And we are looking forward to working with you and realizing some real premium savings, along with a sizable potential refund for your employer groups. Now, Kim, I believe you're going to touch on any potential questions that might have come through while we were doing our webinar.
Yes, please continue to add if you've got any questions. We're going to address a few of those that we've received. John, what is needed to get a quote?
So all we need to do to provide a base rated quote, a street rate quote, is a full census with coverage elections. Now, the more information you can provide, the better we're going to be able to serve you as the agent. So if you have dependent information, things like spousal dates of birth, number of children, even children dates of birth, I encourage you, please send that over. In the event that we don't have that and we're running a base rated quote, a lot of times we'll use the primary insured date of birth for the spousal date of birth. And if we don't know how many children are on a plan, we might estimate 2 children. That gets us in the ballpark for an initial quote. Obviously, things are going to get a little more detailed once we get full applications in on the group. Now, for a pre-screen, we'll accept any carrier's application that has medical questions. So keep in mind, those rates could be subject to change once we get our applications completed for new business submission. But so long as the information is consistent across each set of applications, there's not going to be a whole lot of wiggle room for those rates to potentially change.
John, we had a question regarding going over group size again.
Yeah, so with this product, it is available for 5 to 75 enrolled. And I want to make mention on the 5 to 75 enrolled, that doesn't necessarily mean that if a group has 75 total full-time employees, if they have more than that, we're not going to be able to quote. So even if we have a group of 80 or 85 and we've got 10 legitimate waivers, we're still going to be able to write that group if they are under 75 enrolled. Now, we do have to meet some participation guidelines, 75% of the eligible after waivers, and we do want to see 50% of total full-time. So that might give you an idea on, if a group is going to be a good fit for us or not, but it's 5 to 75 enrolled.
Okay, and then I think the last question, so we can keep this to a 30-minute presentation. You said you can pre-screen on any other carrier's applications, correct?
Yes, correct. Provided they have medical information on the apps, correct.
Great, great. Well, we want to thank you all for coming. We've got some additional questions coming in, so John or I will get back with you to address those. If you need anything, we're here to assist you. If you're working through a channel with IHC currently and they're taking care of you, please reach out to them. It will eventually filter back to John and I, but we are here for you. And we will continue to send out more webinars on our INX Cloud, and we'll let you know what our next product webinar will be here in the next 2 weeks. Thanks so much for attending and have a great day.